Jason Hartman, talk about how you analyze risk, what you see seen the last few years in the market.
Yeah, Bronson. So just kind of a few points to dovetail on everybody else's thoughts. The first thing is I want to expand on that idea. I remember a long time ago when I was a traditional real estate agent, very young one, and I remember I was doing a deal and I was doing a really good business. I was selling like 70 houses a year. I was one of the top agents for RE/MAX in the world at 24 years old. And I remember doing a deal with this one agent, and she said that she never had a transaction fall out of escrow. And I thought, you don't do any transactions. Like, in order to do something, you must dare greatly, right? You must take action, and not all action will be perfect. Not everything will work out. You've got to have a tolerance for failure, right? In Silicon Valley, a lot of the tech guys say, fail fast, right? And so you just got to understand that that's life, okay? Life does not work out well. It's messy, okay? And you've got to be able to tolerate some of that mess. One of the quotes that influenced me a lot when I was really just starting was, I wonder which is worse, to try and fail or to fail to try, right? You got to try things. That's the only way you're going to learn stuff. It's not all going to go well. And then the second point is that, we've had during the COVID era, one of the many phases of very easy money, right? The money supply was loose, the money was cheap. I remember 25 years ago, back to the dot-com bubble, the first dot-com bubble. And you might remember that. And there was just this giddy like excitement. And there were all these people starting all these companies. And if they put .com on the name, suddenly they could raise money. And some of their businesses were like a complete joke. And everybody's a genius in a bull market. Everybody's a genius when the money is cheap and plentiful, okay? The real winners are the ones who can sustain through hard times, right? That's what the difference is. The late Stephen Covey had a great distinction on when you're analyzing risk, what you could look for, right? There's two kinds of trust, not one kind. There's confidence trust. You have confidence in the other party that they're going to do what they say they're going to do. And there's competence trust. Okay. They may do it. You may have confidence in them, but they might be really dumb and just mess up. So 21 years ago, when I started helping investors buy properties nationwide, I created a framework, and I just, for lack of a better name, I called it the 10 Commandments of Successful Investing. And the one that has resonated with people the most is commandment number 3. And before I tell you what commandment number 3 is, I'm just going to say you can't always do this, okay? But you've got to always remember it as something that should inform your decisions when you're an investor. And commandment number 3 is, thou shalt maintain control. We don't raise any money or have any syndications or funds or anything like that. We just help people be direct investors. And I always say when you relinquish control, when you invest in someone else's deal, the 3 risks you take are, number 1, you could be investing with a crook. There's no shortage of Bernie Madoff, Enron, WorldCom, Global Crossing. There's just a million stories like this in the big media. But there are smaller ones, like in our own industry recently, a guy with Narada Real Estate named Marco Santarelli, he was just indicted for wire fraud, allegedly basically ripping investors off to the tune of $62.5 million. So pretty big, they're accusing him of running a Ponzi scheme and so forth. And so the first problem is you might be investing with a crook. The second problem is you might be investing with an idiot, and they'll lose your money because of their crookery or incompetence. The third problem, assuming they're honest and competent, they may take a very large management fee off the top for managing the deal. And you'll get something, but it won't be as much as you should get, right? Now, when I see promoters out there promoting a deal, they're always promoting the deal. Here's an apartment building we want to buy and we're raising money for it, right? But what they're never talking about, they talk about all the elements of the property and the deal and the market and how it's a growing market and all this stuff. But they never talk about the fees they're charging.
Yeah.
And investors need to get very keen on what kind of fees are they charging as a sponsor for running this deal? They're charging a fee for, setting up the whole deal, but then they're charging little fees like acquisition fees, disposition fees, management fees, usually their own company's doing the management. And that's all fine. Everybody's got to get paid. I get it. But as an investor, just be aware of this stuff and understand what the sort of the typical fees are. And, is this sponsor or promoter charging like the typical fees, or are they charging a lot more? I remember one that I looked at, the guy was actually on my show and he was doing mobile home park syndications, and like his sponsor fee was insane. It was ridiculous. And the guy was super knowledgeable and he was really interesting to talk to, but you've got to also not just vet the deal, vet what you're being charged in terms of
Yeah.
look, you buy a mutual fund and you would look at the fees that they're being charged on that mutual fund. You should do the same thing in a syndication or a small fund. That's all I'm saying.
Exactly. I think that's fees are a big way, and like I love that competence, and then can you trust them? And I think honestly, this has taught me too of having some diversity is really important. I know a guy actually at a dinner that you were at, Jason, and we did at Limitless recently, and this guy worked in the oil and gas space, and he had some oil and gas deals. He invested in deals that we did, and he also had his company stock with oil and gas, and he just loved what was happening in oil and gas. And I said, "Do you think I should do more?" And I said, "No, I think you should probably do a lot of other things not related to your work." Because the problem is like this is what happened when people work for Enron, right? It's crazy. These people regular people
Elon.
working, and then they had all their retirement stuff in Enron. And so when Enron went up, they not only lost their job, they lost all of their savings.
Yeah.
And so having things in different things can be really powerful.
No, no question. Hey, one more comment on that, just quickly.
Yeah.
Be careful of when you think about competence trust, be careful of trusting a resume. Now, look, what else can you go by? You got to look if the person has a track record. But I just want to say this because think about it. Bernie Madoff, who ran the biggest Ponzi scheme in US history outside of the government, the Social Security system is the Ponzi scheme he got the idea from, he said. But he had an incredible resume. He was president of NASDAQ. He sat on ethics committees for, like the guy's resume was amazing. You never would have suspected he was running this big Ponzi scheme. And then the other one is John Corzine, MF Global. He was governor of New Jersey. Okay.
Wow.
Like, these guys had giant resumes, right? So, you got to really do your due diligence. That's what
Yeah.
this meeting's about.
I love this talk today because we all have things that we're sharing. We've all been through stuff. And so
Yeah.
again, I hope as an investor, you look at this and say, I can, it says a wise person learns from their own mistakes, but a genius learns from the mistakes of others, right? So all of us up here have had issues and things haven't gone as well as we want. So that's how we learn.
This is the case. This was in the Orange County Register. It was in many media outlets. This is the Marco Santarelli case. And this is Narada Capital Management was his fund company, but he's mostly known by Narada Real Estate. So I think the first hearing that kind of starts his trial and his legal proceeding is on October 20th in Orange County, California. It's a federal indictment. They're accusing him of stealing basically $63 million almost. And the article goes on in the Orange County Register and, profiles many of the people who lost money. One of them is one of our clients, actually. He also was a Marco Santarelli client. He lost a bunch of money with him. So I hope there's some recovery. I think from what I heard, the feds did seize some money from him, about like $5 million or something. But, there's a lot more that was lost if it's 62.5 million.
Let me say something about this real quick too. This is a guy that, I went to events where this guy was at, and I wouldn't say he was the most personable guy, but he would speak at events, he would go places, and
Oh, yeah, he's well, yeah.
Jason had a radar about him early on. I just thought, actually we have some mutual friends who know him, and
Yep.
but it's sometimes it's hard. Obviously, we look back, we can see it, and we think no one but that's the challenge of this industry. It's not regulated. If you're a broker dealer, if you're an advisor, there's still people that do things illegal, but it's a little more. It is a little bit of Wild West, and that's where it's like when we start with a new operator, we typically never just invest right away.